So why is Russell 2000 a leading indicator? So first of all, I think Russell 2000 is definitely one of the reference that we can always refer to, because it just represents the small cap. And whenever there's market weakness, for example, like in a bear market or in a market correction, or in a market crash. Whenever we are in a market weakness, small cap usually under a lot of the pressure. They are usually the first one to get shot down and to get distributed. So that's why Russell 2000 is always a good benchmark to refer to. So if we look at in 2019, so this is the S&P 500. So versus the Russell 2000, and the above pane here is the S&P, and the bottom part is actually the Russell 2000 futures. So you can definitely tell from here there is some sort of the similarity or correlation. So let me run through this. So first of all, if you recall, like 2018, there is a really a change of character. So due to the U.S. and China trade war issue, and subsequently there is a lot of the volatility involved and setting up a nice rally up. So there's a nice rally, but eventually it just create an uptrust. So this is literally an uptrust. So if I draw a line here, you can see that there's an attempt to commit above this previous resistance, but eventually it just failed. Okay. However, that's S&P 500. But if we look at Russell 2000, so Russell 2000 actually is just outperform S&P at that time, but it's actually the first one to get rotated out and get experience the sell off. So if we just focus on this part here, so somewhere around October in 2019, and look at this. So there is a potential reaccumulation. So at this point of time, like start from September, potential reaccumulation. So it just experienced a sign of strength rally here, followed by a backup action. So I think at that point, at that moment, even the volume signature looks quite decent, and we just do not really see spike of the supply until we see the pullback here. But even with this pullback, with a localized increase of the supply, and we still did not really see any breakdown. So I think that's the encouraging part. However, it doesn't really rally above this danger zone as well. So ultimately, from these few bars here, we definitely see a localized breakdown. So this localized breakdown actually it just correspond to this part here. So it's the same date which I just highlight or circle in the orange color. So exactly the same four sessions. So while Russell 2000 experienced a breakdown, so there's a breakdown from this localized support area, and subsequently followed by another test, and then eventually this is sort of like at the confirmation bar, so breaking down. But look at S&P 500, it's just have another breakout attempt. So I just wrote here, breakout attempt. So while there's a breakdown here, localized breakdown, S&P 500 just had a breakout attempt, but it did not really break above and commit above. So it's just an attempt to break out. But still, you can definitely see that from here on, the Russell 2000 actually leads the way down. Once it actually break down, coming below, here comes a sell off. So it just immediately tested the previous support level. So back to this big, or actually this little trading range, not a big one. And subsequently, here is the breakdown. So this is just like a breakdown or the beginning of the markdown. So there's like if previously an accumulation or reaccumulation structure turn a distribution, because there's a sort of a failed sign of strength rally and become a U-tap. So there's uptrust after distribution and followed by a failure. So the failure of the backup action actually shown up right here. So once we identify the failure, then you can see that the Russell 2000 actually just immediately come back down to test the support. So quite typical technical stuff. So tested the support, but eventually it just struggled to have any kind of the rally. So look at this, a bit of the demand tail, but the rally is just almost negligible. So after that, there is a breakdown. So that actually marks the sign of weakness. So this is literally a sign of weakness, and then followed by this LPSY, so last point of the supply. So the sign of weakness actually started with this breakdown bar. And if we just look at this breakdown bar in S&P 500 at that time, so it's exactly the same day. I just circle in orange color. So in Russell 2000, this is actually a breakdown bar, but in S&P 500, this is just a failure, right? So a failure just like this, so a breakout failure. So this is a breakout and then eventually just break back in. So this is a failure bar. So it's not actually breaking down, but for Russell 2000, it's actually a breakdown bar, forming a sign of weakness like this, and then LPSY, followed by another sell down. All right. So subsequently, while it's actually forming a redistribution, so sort of like trading range here. Look at this part here. So just probably prior, like 1 or 2 weeks prior to the Christmas, uh, Russell 2000 actually experienced a breakdown. So while the S&P 500 is pretty much holding up well and is sort of testing this support level. So I just right here. So it's testing a support versus there's a breakdown here. So there's a breakdown. Look at this. That's highlighted in orange color. Breakdown. Failed to rally up. Tested the access line. And then eventually have a reversal bar breakdown. So is just the leading indicator. So instead of testing a support, it already shows you that the intent. So I want to break down. But if you look at S&P, probably a lot of people will still be wondering like, well, whether it's a testing a support or could it be, well, eventually lead to a breakdown. So that actually just provides some clue because Russell actually leads the way down while it's here and also while it's breaking down, and that is actually a failure. So this part here is just like it break down first while the S&P 500 is still testing a support. But you can see that eventually, while it's sort of like entering into the breakdown mode with a momentum, bearish momentum bar, and eventually it just have a very sharp sell off. It's like probably 10% within maybe 6-7 sessions, all the way into the Christmas, and I have a V-shaped rebound. So this is exactly like what S&P experienced. So you can see that if you're not clear about this, at least if you refer to Russell, it sort of tells you in advance like it's going to break down and the support is not going to hold. So because it actually leads the way down at the beginning and it leads the way down when it's breaking down, and it's also for this redistribution part as well. So that's happened in 2019 during the, well, I call it the Christmas sell-off, but have a very quick recovery up. So if you look at a very big structure, it's like a V-shaped recovery, or you can call it a shakeout, right? So if I just draw like this, so it's like a shakeout, have a very quick recovery, or you can call it a deep spring. So this is like, well, not a typical spring, but really it's like a shakeout type with a V-shaped rebound. So ultimately, it's you have a very quick recovery and then going back to the rally mood. So back to today. So let's just have a look today, this year, 2022. So this is also the same comparison, comparing the S&P 500 versus the Russell 2000. And you can definitely tell there's similarity involved. So first of all, let me start with Russell. So let's look at Russell. So in the Russell, I think the real distribution actually only started in end of the November here. So that is sort of like the beginning of the distribution. So before that, I think it's quite clear that this portion right here is sort of have accumulation characteristics. You can definitely look back, check back of my videos, whether it's these sessions, or you can just look at some of my YouTube video as well. So definitely the stance or the directional bias is going up. So there's a sign of strength rally followed by a backup action. However, something is happening right here. So there's an increasing of the supply when it's coming back down, but still, as long as it's holding up this axis line, it looks fine because it's like a sign of strength rally and with a backing of action followed by a reversal and then breaking out. But it actually had a failure right here. So once it's had a failure, and then we see that there is an increasing of the spread, increasing of the speeds, and to the downside, and together with increasing of the supply, look at this huge supply. So comparing to the previous volume, so there's a ton of the supply on the way down. So this is like the distribution on the way down. So it's kind of a bit unusual from the typical Wyckoff distribution, while we can definitely tell like a lot of the distribution happening in these upthrust. So this is like a distribution on the way down, so on this leg down, and then followed by another redistribution. So I just mark this or label this as the sign of weakness 0. So this is the first sign of weakness. So when there's a huge supply level here, and then followed by, I think this is definitely the biggest down wave. So there's a sign of weakness followed by a redistribution. But during the same period, look at S&P 500. So while Russell experienced a sign of weakness here, just within maybe 2 weeks or 3 weeks with this leg down, S&P 500 pretty much just have a mild reaction and then followed by a quick recovery, forming a trading range here. But this is sort of like the topping formation, like the distribution or the structure. So there's this upthrust. So look at this. If I just draw a line here, you can definitely see there's a breakout, fail, and then break back in. So this is upthrust, UTAP. So upthrust after distribution, and then followed by a sell off. So then eventually just break down. But if you look at the same period here, so I mark this with the orange circle. So while Russell 2000 actually break down, and S&P 500 actually also break down from here, but the context is different because this is just the original distribution structure, but here is like after sign of weakness, a redistribution, and then followed by a breakdown, and then comes another sign of weakness as well. So Russell 2000 actually provided quite a few red flags from here. So at the end of the November, while S&P 500 is still within the trading range, a lot of people probably couldn't really tell until maybe the breakdown happened right here, or at least after the upthrust here. However, Russell 2000 already give you a lot of hints. Here's a sign of weakness, so I'm going down. Okay, bearish. So subsequently, there's another redistribution, and when it actually breaks down, then we know that it's going to get quite significant as well, because that actually coincides with this swing low. So there is a swing low from this big trading range started in probably I think March or February 2021. So this whole big structure is getting violated. So previously I thought that this is probably a reaccumulation structure, but now the distribution actually started on a way down, followed by redistribution, and then another breakdown. So definitely is looking very bearish, and we know Russell is actually leading the way down when there's a market weakness, and a lot of the small cap stocks get sold off first. So S&P 500, because this contain a lot of the big cap, mega cap stocks, so they are probably like the last man standing, and eventually it will get rotated out. So now, if we just look at the most recent trading range, which is I think here started from January. So I think if I remember correctly, this is 24th of January. So right after the selling climax form here, so there's a selling climax. So after this sign of weakness, we have the automatic rally, followed by secondary test, and I label this as the UTET, and that's actually confirmed by the sign of weakness. So the sign of weakness actually you can definitely tell is the largest down wave, and then within this, like start from maybe the past 2 or 3 weeks. So this portion, So maybe near the end of April, and after the sign of weakness tested the support level, we see there's a attempt to bounce up. So we got one bounce, second bounce. So still, these two attempt to bounce, two attempt to rally, encountered by excessive supply. So we definitely get excessive supply here. There's a supply bar, and then eventually, like Thursday and Friday, is sort of create a lower low. So definitely all of this, if you compare to S&P 500. So look at the past 2 weeks. Look at this. The testing is still at the support level, support area, right here. Look at this. So this portion is still testing the support area, while the Russell 2000 is actually sort of like breakdown and then showing inability to rally, some rejection. So it's very similar, or is if not, it's like exactly the same as 2019. So let me quickly go back to this 2019 chart. So look at this. So look at this portion compared to this. So how does that look like? So breakdown, inability to rally, and then sell off, while S&P 500 is still testing the support area. So that's 2019, and this is this year. So we just experienced, and we are right here. Okay, so breakdown, unable to rally up, and then eventually would it have a breakdown and then crash down here, and then we definitely will see S&P 500 to follow as well if we get this type of the breakdown. So if it happens, so no matter right now is testing the support area, it will get dragged down, and then by that time Apple, Tesla, Nvidia, so all type of the quality stocks, well-known stocks that you can think about will definitely have a sharp sell-off, a sharp move down like this. So when it breaks down, then definitely you can expect a sharp move down. So last Sunday I talked about the point and figure targets is somewhere around 3600. Okay, so 3600 is like sort of the target for the sell-off if it happens. But bear in mind that the point and figure chart only tells you like there's enough fuel in the tank, which means that there's enough causes built for it to travel to that far to reach 3600. So I believe there's still some more downside if I really want to extend the count, but it doesn't really matter. So as long as right now, if suddenly we got some news or whether just some technical stuff, got a big bearish bar, then the whole market will just tank and crash. Okay, so that's a very likely scenario.